So good morning, everybody. Welcome to our continued Zoomcast series. It's great to see so many friendly faces, and happy that you could all join us today. On behalf, first of all, my name is Robert Crowder, and on behalf of all of us at the Benefits Trust, we'd like to take this opportunity to thank you and thank you for joining us today. Oh, there's Simon Marples. Yeah, he just joined us. And we're excited. We're excited about our conversation today. We're going to, and the key word there is conversation. We've had some feedback from a number of you that we want this to be more interactive. So we want to hear from you as well. So if you want to just chime in at any time, you think I'm crazy, you think I'm offside, you think our presentation is incorrect, or you want to add to it in a positive way, we love it. Put up your hand, or because there's a lot of people on the screen, it's actually spread out over a couple of screens. So I won't see you. So just put up your hand or just jump right in and say, whoa, 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 hold on a second. That's crazy. That's nuts. Or, hey, good idea. This is a neat thought, and let's go down that path. So for participating today, you're going to get a CE credit. Mike Ignatz is with us in the house from the Benefits Trust. Mike is going to send you a CE credit today. As well as that, if you have any questions or just want to type them in the chat box, put them through so everybody can see them. And Lindsay Gibson is with us today. Jordan Bullhose is here. And as well as that, Rob Crowder, who is going to be behind the scenes, letting people in and monitoring everything as well, so it runs smoothly. So if you have a question, type it in, and anybody can answer it, but we'll answer it as well. So you're going to get a CE credit. You're going to get a really short survey where we get that feedback that we want to do it better tomorrow than we did it yesterday. We want to see future ideas on what things you'd want to see covered in Zoomcast. We're committed to do these every single month throughout 2024. And we're open for business. I know we do a lot of business with some of you in the room, or many of you in the room, but we want to do more. And if we're doing business, thank you very much for your continued support. And if we're not doing business, we'd love to do business with you. It's not about being in a room listening to somebody speak. It's about being in a room where everybody gets smarter. I've been fortunate to be in the insurance business for 35 years now, and I've attended many, many, many sessions over those years, and with many of you, as a matter of fact, the most recent one being just last week, the CGIB session that Dave Patcherish put on. It was excellent. But if you get one good idea out of it, I think it's time well spent. And actually, speaking of events, Irv, can you chime in for a second? You've got a breakfast meeting coming up, don't you? No, you got to unmute yourself, Irv. Irv, unmute yourself.
Can we speak on his behalf, Rob?
Yeah, please.
So Irv hosts a meeting every month, third Wednesday of the month. It was primarily for advisors in the Durham region, but anyone in Canada is welcome to join. Irv's there now. Okay, Irv, you can take over.
Yes, good morning. Thank you very much, Robert and Chris. Yeah, we have every third Wednesday of the month, we have a meeting. We have about 25 people, including advisors and carriers. So it's a very interesting meeting. And we ask people to, just like you, bring questions. And we've been doing it, I guess, now on Zoom, I guess, for 3 to 5 years, I guess. And prior to that was about 10 years after I took over Dave's meetings. So it's been very successful and happy about it.
Yeah, they're just great spots and great meetings, and you learn lots as well. And it's just more of an open forum. But hey, Chris, maybe you could throw the link in the chat box. But if you want to attend, it's a great meeting. So let's talk about short-term disability and critical illness. We're going to do a deep dive, or a dive into short-term disability and critical illness. And what we want to talk about today is employment insurance, because I think that's a really important component when we're talking about short-term disability. We want to talk about short-term disability plans, of course. We want to talk about some creative plan designs with respect to short-term disability. We want to talk about who's buying short-term disability. We want to talk about critical illness plans. We want to talk about creative CI plan designs. And you might be thinking, how creative can you get with CI? But there's some interesting things that you can do. We want to talk very briefly about STD, short-term disability, and CI integration. A quick summary, and then, of course, questions and answers and discussions. But we encourage you throughout the session, if you've got a question, thought, an idea, something you want to share, please do so. Please do so, because it's about being in a room where everybody gets smarter, and that means we all get together and we all share information. A little quick commercial about the Benefits Trust. We started on January 1st, 1994, so we've been in business for just over 30 years. We are a full-service third-party benefit administration company, which means we do everything in-house. We adjudicate and pay claims. We send out bills, we send out financial statements, and we work with advisors like yourselves. We are the largest independently owned TPA in Canada. We provide custom employee benefit solutions. We just don't provide, I know it was still crazy to me, but somebody said we lost a piece of business recently because the client didn't want to continue with healthcare spending accounts. They wanted to go into a more traditional plan. And when we talked to the advisor about this, the advisor said, "You mean you guys do other things other than healthcare spending accounts?" So it's just amazing. We provide all levels of benefit plan design, from healthcare spending accounts to 100% business owner solutions. So it's everything in between. And I know Mike and Jordan and Rob and Lindsay, of course, they would be happy to talk to you about in more detail about what it is that we do. We provide exceptional client experience. One of the things that we like to say is we do the 5% extraordinarily well. And what I mean by that is, yeah, we pay claims, you use your app on your phone, et cetera, et cetera, et cetera. But when there's a problem, for example, with a billing statement or a question that a client has, anything along those lines, we're available during business hours, either via phone, where someone live is going to answer, and we try to have a single call solution, if you would. So we try to answer the question that the employee, the member, the administrator, or you, the advisor, has with a single call, as well as that, we want to get the answer quickly. We want it to be accurate. So you don't have to enter your 17-digit PIN number and go through automation after automation after automation to get somewhere you don't want to be. I was trying to cancel something on Amazon the other day, and although they made it easy, they made it extraordinarily difficult. So anyways, long-term relationships with major insurance companies and service providers. So we're not tied into any one particular insurance company or supplier market. We've got a number available. And our target market is working with people like you, professional advisors that are really dealing with clients from 1 to 100 employees. And why do we do this? Why do we deal with a lot of companies that are larger than that, but our target market is that 1 to 100. And the reason is there's 440,000 of them in Southern and Central Ontario. And I know we've got people from across the country on the call right now, but in these metropolitan areas, there's just so much business. 440,000 businesses with less than 100 full-time employees. That's endless prospects. Endless prospects. I live in Huntsville, Ontario, and when I drive down to Toronto, it's usually once a week, for a couple of days. But it's the number of businesses that you pass just along the way to get to the destination where you're going is extraordinary. All of these businesses are with an hour drive or a click away. So there's really just endless opportunities. So when we say that's what our target market is, that's the reason why. There's endless opportunities. And it's amazing. And I don't know the number. And I don't know, somebody might know the number of how many advisors there are in Ontario, how many licensed advisors there are in Ontario. All right. But there's, 85 of us on the call right now. So there's just enormous opportunities. And I can't remember who it was, but somebody at the meeting on the CGIB meeting last week was just saying there's enough for everybody. There's enough for everybody to go around. And that's so true. It's not a zero-sum game. So there's an enormous opportunity out there. But the other fascinating stat that Dave Patriarch brought up last week as well is the more than 50% or something like 50%, and maybe somebody can correct me on this, but 50% of the population buys benefits from an advisor that sells less than one case or one case a year, which is amazing when you think about it. Would you go to a dentist that only treats you? Doesn't have any other practice on anybody else? Or a surgeon? Or would you go to a mechanic that only fixes one car a year and that's yours? Like it's just amazing when you think about it. So there's enormous opportunities. Taking a step back, what is a benefit plan? A benefit plan is nothing more than a promise between an employer and employee. I keep on putting this into these presentations, and I do it for a reason, because it really changed my behavior. And it changed the way I have conversations when I meet with end user clients and when I'm with advisors and meeting with these end user clients. I always start off with this, and it came from a meeting a number of years ago, and it was not going well. The advisor that I was working with was really confusing the potential client, the prospect. And the client was sitting back in his chair and he had his arms crossed and he was just getting upset. And I just said, hold on a second, stop. What are we talking about here? And again, I have no idea where this came from, but I said, stop. And I go, what are we talking about? And he goes, we're talking about this health insurance stuff and group life insurance. And I said, no, we're talking about a promise that you as the business owner makes to the employees. And the light bulb went off in his head. His body language changed in this particular case. And then he realized that when I use the word promise, it's a big thing. If I promise Chris Gorey something, or Blake Waddell, because that's who I'm seeing on the screen right now. But if I promise Chris, if I promise you something, I'm going to keep my promise, because if I don't, you're going to tell everybody at the next CGIB meeting that, oh, Rob's might be a good guy, but he doesn't keep his promises. Zero credibility. So it's a promise, and it's a powerful word. So a benefit plan, when you have your prospects viewed as a promise between an employer and an employee, all of a sudden there's this freedom that shines through their head, because they can promise anything they want to promise. It's entirely up to them. That's why they're entrepreneurs, right? And in order to understand where your client is going, you've got to ask, and you've got to ask these future-based questions. And the simple question that I love to ask is, if we were meeting here 3 years from now and you were looking back over those 3 years, what has to have happened for you to say it's been the best 3 years of your life? Speak in English, right? We use too many TLAs in this business, 3-letter acronyms, right? We use way too many of these things. And Anthony was joking about it in the presentation he made last week about all the TLAs, adjusted premiums and IBNRs and target loss ratios and so on. And they're important, but not from the client's perspective. When you've got a 10-person group or a 15-person group, they're looking at benefits maybe for 30 minutes a year. 30 minutes a year. You've got to speak in clear English, and you've got to know where the client is going. This particular case that I was telling you about, where the advisor said we lost the case because they wanted to move in a different direction. You know what? He never asked what direction they were going in. He wasn't in communication with his client on a regular basis, and he lost that case as a result of that. So you have to know where your client is going, and how you do that is asking. Sickness benefits. Sickness benefits. If your employees are unable to work during illness, injury, quarantine, what promises have you made your employees? It's interesting. What promise have you made your employees? Do you know what your sick day policy is? You ask the advisor, or you as the advisor should ask that question to the business owner. We're not talking necessarily about short-term disability at this point. We're just talking about what their policies are, what their corporate policies are. And what's your corporate policy for new employees? What's your corporate policy for the 20-year employee? What's your corporate policy for family employees, right? Do they know what it is? But these types of questions lead to these great conversations. And it's interesting, a lot of smaller employers, and you might have 20, 30, 40 employees, and they don't have a formal policy. The policy's up here. The policy's in their head. It's whatever we feel like at the time. And as businesses grow, that becomes dangerous. That becomes extraordinarily dangerous. And you as a professional advisor need to advise employers of the potential pitfalls in the promises that they are making, right? And it's interesting because, a new employee might have a very different promise than, Mark or Mary that's been there for 20 years and so almost part of the family, and then they get sick. Well, hold on a second. Can you treat the people differently? And then family employees. Well, Uncle Harry works here, and he's sort of a charity case, but we keep him employed and keep the company or the family happy. But what happens if he can't come to work for a month or 2 or 3 because he's sick or injured, right? How are you going to treat that person? So these are all important conversations to have. A lot of people say, hey, we're just going to rely on EI. Yeah, we got EI. We pay into it. No big deal. Everybody's got EI. Well, let's just talk about EI for a moment. Let's talk about EI. These are table stakes. You need to know this stuff. If you don't know it, you should do some research. And there's a lot of mumbo jumbo, if you would, about EI on the internet. There's a ton of it, but I just try to put the highlights on here. So assuming that someone has worked full-time for the previous 12 months, the EI benefit they would be eligible for would be 55% of their average insurable weekly earnings, up to a maximum of $668, and that's payable for 28 weeks. So if someone's sick, right, and they've been working for the previous 12 months, let's just assume they're going to get 55% of their average weekly earnings, insurable earnings, up to $668. To be eligible, and this is coming from firsthand experience, to be eligible, you need a medical certificate signed by a medical practitioner when you apply. So let me tell you about my experience. My middle son, who is a great kid and, works hard and does his thing. He had he works outside, and he he can't sit behind a desk. He doesn't have a job that he can sit behind a desk in. He hurt his knee and needed reconstructed surgery on his knee as a result of an injury. Right. And he needed EI. He needed it bad. Canadians live paycheck to paycheck. He needed it bad. And we told him, he lives in another province. He lives in Alberta. And we told him he's got to get a doctor's note. And he's, I don't want to say afraid of doctors, but he doesn't know how to speak to doctors because, they're doctors and he's not. And we said it has to be readable. It has to be on the practitioner's letterhead, or have an official stamp. It's got to include your full name. It's got to include a start date and an expected date and a practitioner's signature. Well, it was interesting because the start date was very clear, but the expected duration was unclear because he needed surgery and the surgery was not able to be booked. So that was left blank. So think about it, how difficult it is to get this type of thing if you're sick. And in this case, he wasn't really sick. He was just had mobility issues, which is hard enough. But if you're really sick and you've got to do all this type of stuff, it becomes difficult. A medical practitioner includes MDs, chiropractor, podiatrists, psychologists, dentists, midwives, nurse practitioners, RNs in local or isolated areas where MDs aren't available, right? But you need to get them to sign this report or sign this note, shall we say, right? And it's amazing because, when you go and see your doctor, I'm going to go see my doctor for a regular checkup in a couple of weeks. Well, I've got a solid 10 minutes with him. I've got a solid 10 minutes with him. And you've got to do all of this stuff and get all this stuff before you can even start filling out an EI application. You need your personal information. You need this medical certificate that's signed, right? And you need your record of employment from your most recent 12 months of employment. That might be 1, that might be 2, that might be 3 records of employment. So the sick person or the person that's having mobility issues, regardless of the situation, is doing a lot of work before they can even apply for this benefit, before they can even apply for EI. Now, it's interesting because Canadians live paycheck to paycheck. We all know that. You can't turn on the news. You can't open up TikTok or Instagram or Facebook without finding out something, about our government and what they're doing and how they're changing taxes and raising things and doing different things. And grocery prices are so high and rents are out of this world and housing costs, etc. So all of a sudden, you're living paycheck to paycheck. And now all of a sudden you've got to do all this work because you're sick and you're concerned and you're not sure how long it's going to be because this isn't just the flu. This is something more. And then you can apply online, but you've got to send in or drop off your stuff you can do it online. They've made it easy. You can do it online, but you've got to still send in your stuff to Service Canada. And then it can take up to 1 month for approval. And they guarantee that promise, or quote unquote, guarantee that promise 80% of the time. 20% of the time, it's going to take more than a month. In addition to that, you must submit bi-weekly reports and payments start after 1 week. So for that first month, you actually only get that 3 months or 3 weeks of payment. But again, that starts after a month. So it was really interesting because my son, so we're dealing with my son in Alberta. He's going through this process. And guess what? He had no money. So he had to go, surprisingly, to the bank of mom and dad, right? We had to fund him so he could eat. We had to fund him so he could pay his rent. We had to fund him so he could put gas in his car to go to his appointments to get these medical reports and get these medical reports redone, right? So it was a trying situation. And as a young man, he was going, I hate coming to you for money. Right. And it was tough. It was tough on him emotionally. It was tough on us emotionally because he was tough on us emotionally. And it's just, it's what it is. So EI translation, when employers look at this, they say, oh yeah, we got EI and we're not going to worry about it. But sometimes when they look at it a little bit more closely, because you've created great conversations and you've had great conversations and you've opened their mind to some things, they're going to look at the EI translation as cumbersome. And they're going to say, hold on a second, maybe we want to look at this a little bit different. So that's when short-term disabilities come into play, right? Short-term disability plan. You know, short-term disability is also known as a weekly indemnity plan. That's insurances, short-term disability plan, a salary earnings continuation program, attendance management program, absentee management program. But it's really a promise to pay a defined amount weekly if you can't come to work due to an injury or an illness. Now, this might be formal, like it might be a formal plan. It's with adjudicated by an insurance company or a TPA, right? It may be just a corporate policy that if you can't come to work, we're going to continue your pay. We're going to continue to pay 75% of your pay. We're going to continue to pay some of it, right? Or it might be just a promise because, quite frankly, the employer has never had to deal with it. And it's interesting because I don't know, many of you, I think, maybe attended our long-term disability session that we did last month. Small employers versus large employers. And when we're talking about small employers and we're talking about disability, generally speaking, small employees do not go off on short-term disability or they don't go off for weeks and weeks and weeks at a time unless they're really sick. And often there's that arm around the shoulder type of conversation that the business owner's having that says, hey, we're going to take care of you because it's that family atmosphere. I'm not saying it happens all the time. I'm saying it does happen, depending on the employer. So the policy may be very formal. The policy may be just a corporate policy, or the policy may be just a promise that they've never had to deal with in the past or had to deal with, once every 10 years. But it's important to have those conversations and to have the conversations with the employers so it is top of mind, your clients, so it is top of mind for them. But it's really a group short-term disability program, depending on how it's wrapped, is that promise to pay a defined weekly benefit if they can't come to work due to an illness or an injury. So some questions to ask is, when you've talked about EI with your clients and maybe they've had some experience with it in the past, but the questions to ask is, do you want your employees to have to do this? Do you want your employees to have to jump through all of these hoops when they're sick, when they should be focused on getting better and recovering? Do you want them to have to jump through all these hoops? And we all know how difficult it is to get, a medical practitioner's note. And I'm sure all of you, if I could see most of you on the screen, you'd be agreeing with me. And if anybody has any thoughts on that, I'd love to hear from you about it, or everybody would love to hear from you about it. Right now, the other question is, do you want to have your executives do this? Your key salespeople do this. Do you want to have your executive team, your right-hand person doing this? What is your sick leave policy? What is your sick leave policy? The other thing is, do you want to outsource the confidentiality of your sick leave policy? They might have an internal sick leave policy that says, hey, great, we're going to keep people's salaries up at 75% or 100% or whatever it is if they're off sick for an extended period of time. But great, you got to prove that you're off sick. Okay, fantastic. Do you want to outsource that because of the confidentiality of the medical information? Some employees may not feel comfortable telling their employer what's wrong with them. It's their privacy, right? And then the other thing is, do you want to have early intervention on your sick leave policy? Pardon? Client's going, what? Early intervention? Well, what does this mean? Well, thank you for asking. Let's start a conversation about that. When you have conversations like this, and it doesn't necessarily have to be at the time of the renewal, right? It can be any time throughout the year. When you have these conversations, you are separating yourself from the other advisors that are not doing this. They're not having these conversations. A lot of advisors are just saying, hey, you know what? Let me show you the way to save you 10% and we'll get those premiums down for you. That's what they think their job is. It's not. Their job is, your job as an advisor is to advise your clients on what benefits fit with where they are going and how they want to succeed in the future. So a standard plan, if we were to pull a standard plan off the shelf, here, shelves over here, pull it off the shelf and throw it down in front of somebody, a standard short-term disability plan, and these have been around forever. You might want to look at a plan that has a first day accident or hospitalization. So quite simply, if somebody has an accident, falls off a ladder at home or whatever the case is, a first day accident, or they, go to the doctor and they're immediately hospitalized, great, they're eligible to be paid. Fourth day illness, so it gets rid of all of the, the short-term illnesses like a flu or a hangover or whatever the employee's got, right? So fourth day fourth day illness. And then they'll have some type of formula, for example, 66.667% of weekly earnings to a maximum of $750 a week. Might last 17 weeks duration. Why? Because that ties in with the potentially the long-term disability plan. But again, that's how these things were designed many, many years ago. The amount is to be determined by the employer. It could be $1,000 a week. It could be $2,000 a week. It really depends on the average earnings of the type of employer that they are. If they're dealing with all highly compensated individuals, great. $750 a week may not be enough, right? If they're dealing with a bunch of hourly workers, $750 a week might be okay. It really depends on what the employer wants. But that's a standard type of plan. As well as this, when you have a plan that is better than what the EI plan is, which this one clearly is because of that $668 a week and 55%, the employer is able to apply to the EI program and get a reduction in the rates that they're paying. They'll still have to pay, but they'll get a reduction in the rates. But this is something that the employer must do. You cannot do it on their behalf. You can provide them with some of the documentation like this plan, but you have to let the employer fill out this application and submit it on to get the EI reduction. So some creative plan designs with respect to short-term disability, because we've been doing a fair amount of this. The pendulum's certainly swinging. I'll go into that in a little bit more detail in a few moments, but a lot of companies, they'll do something like an EI STD top-up. So they'll have EI, and the EI will be 75% of weekly earnings up to a maximum of $1,500 for the first week. And then what happens is they're eligible to receive the EI benefit. So they'll get 55%, the maximum EI benefit, for example, of $668. Then the STD goes on top of that, or is the icing on the cake on top of that, up to a maximum of $1,500. So let's assume that somebody was at that maximum, right? They would get after week one, they would get $668 from EI, $832 from the short-term disability program for a maximum of $1,500 per week. And if you were eligible for EI, then you could qualify for the short-term disability. So what they're doing is they're outsourcing the qualification completely to the EI program. So they have the employee must prove that they're on EI, and then they can do this. This doesn't necessarily need to be insured with a carrier. It doesn't have to be facilitated through a TPA. This could be their corporate policy that they just run through payroll, right? And the best part about this type of an arrangement, in my opinion, is they're outsourcing the qualifications to EI. You got to prove that you're on EI, and then you're eligible for this benefit. And it's really like a salary continuation program. But this works really well because what it does is it gives people a little bit more flexibility with the amount of income that they're going to be able to protect. But again, they've got to be eligible for that EI program first. But again, it is cumbersome, so some employers shy away from it. But again, those that don't want to shy away from it but give a fair benefit, and it happens very infrequently in a lot of employers' cases, great. So that's just one creative plan design. Another that I've seen is they go, okay, fantastic. We're going to provide 1 week of short-term disability the first week. Then we're going to have EI for 26 weeks. And again, the employer can choose the amount that they want to have after the 26 weeks are up, because the EI would be the maximum $668. Then the short-term disability kicks in after the EI. So the EI starts on the 26th week, or the short-term disability, plan starts on the 26th week and runs for 25 weeks. So again, they're going to have EI, they're going to be eligible for EI, and if they're eligible for EI, then they're eligible for the short-term disability program. They still have to be under care, and they either send the employer or they send a third party, potentially, those weekly reports or bi-weekly reports to make sure that they're still under care, right? But this is a 52-week benefit, and it can reduce substantially if the long-term disability premium if it's offered. as well as that, you're outsourced the STD eligibility to EI, excluding those biweekly reports on the second 25 weeks. So again, it's instead of a top-up plan, it's a wraparound plan. But what it does is it pushes potentially the benefit back to 52 weeks, or lengthens the benefit, pardon me, to 52 weeks from a standard 26 weeks or 17 weeks, depending on what the plan is. There's another opportunity as well that we've seen, and this is it's got to be done. It's got to be done very well. But some employers have said, listen, we don't want people to go through the EI program. It's too cumbersome. It's too difficult. We don't want them going through that. We want to give them tools available. We want them back at work. So we're going to set up an EI program, or sorry, a short-term disability program. We're going to set up a short-term disability program. It's going to be more of a formal program. And it's going to last for 52 or even 104 weeks, 1 or 2 years, right? We're going to have early and continuous intervention. You must be under care. Medical concierge programs are going to be made available to reduce wait times. So we're seeing these types of programs come in. It reduces the LTD premium if they have one, but it can reduce it materially. And this is great for professional organizations. It can be great for professional organizations, one where people are getting paid a lot of money. They say, we're going to take care of you. We're going to take care of you. You're going to continue your pay for 52 weeks or even 2 years if you can't come to work. We're going to pay for that, but we're going to give you these tools that are available. We're going to give you medical concierge programs to avoid wait times so when you're waiting on specialist appointments, you're going to go see the company doctor, so to speak. We're going to get you into these programs, and these programs are available. We did a session on Advocate earlier in the year. Different programs like that are available. And when you have these early interventions and continuous interventions, it's great because it gives the employee a great deal of confidence in the system because they're getting these concierge programs and avoiding some of these wait times. But it gives them a great deal of confidence in what their employer is doing for them. Right. So this is a terrific way. No EI, the employer sets the maximums. You know, they might be just going 100%. We're going to have your salary continue. We're just going to have your salary continue. Simple as that. There's going to be no reductions, but we want you back at work as soon as you can. And as a result of that, we're going to give you all of the tools available to make sure that you get the best care available. Again, it's a salary continuation program. It's an attendance management program, whatever you want to call it, but it's a great plan design. And what it does is it takes the hands, it takes the what's the word I'm looking for? It takes the you're delegating the care, if you would, not the care. You're delegating the confidentiality to a third party, so the employee as well has that security in place, that they're not telling their employer that they've got ingrown toenails and they can't come to work. Right? They're telling, you know, a medical professional that's talking to them on day number 2 or day number 3 or day number 4. Right? So it's really quite something. These programs can be very, very effective. So who's buying short-term disability? Well, unions are buying it. Yeah, for sure. Unions are buying it because they've negotiated in their contracts. They don't want to have to deal with EI. They don't want anything to do with EI, right? So they're buying it they're negotiating it for their members, right? Small hands-on clients are buying it. And you know why they're buying it? Because people like you, professional advisors, are having conversations about it. They hadn't thought about it historically. Now they're thinking about it because of the conversations people like you are having, and they go, oh my gosh, thank you. I don't want people to deal with EI. It doesn't fit with who we are. So you know what? Yeah, we want to put in a short-term disability program, without a doubt. And then you start talking about it and exploring it. It doesn't necessarily have to mean that you are, you know, putting in a traditional plan with an insurance company. It means you're setting up a plan that makes sense for them and coincides with their policies. Professional and executive groups are buying it. So they might say, okay, for all hourly employees, you're getting this EI program, but for our professional group or our executive group or our sales team or whatever it is, yeah, we're just taking care of your salary, right? As well as that, you know, companies are buying it that where clients want to have control without having control. Again, they want to be in control of their people. You know, back to that early intervention program that we were just talking about, where people can have that, you know, amazing early intervention. where they're having control, but they're delegating that control to somebody else as opposed to a government agency. So there's a lot of people that are buying short-term disability. Without a doubt, there's an upswing. When I started 35 years ago, everybody, or not everybody, but many groups had short-term disability programs included in the benefit promise that they were offering. Then as EI sort of beefed up and became more prevalent, a lot of those programs were dropped. But what we are seeing right now is the pendulum swinging back, and I'm not sure if others are seeing it, but we're certainly seeing it, where the pendulum's swinging back and conversations are happening. Conversations are happening and programs are being put into place. And again, the program can be formal, it can be informal, it can be outsourced to a TPA, it could be outsourced to an insurance company, or it could just be outsourced to somebody as they need it, right? As they need it. But it's amazing the conversations that you can have and the value that you can create. Now, anybody want to jump in here? Anybody have any comments on this? But we're seeing certainly the pendulum certainly swinging back as people, professional or businesses are saying, hold on a second, this EI program is far too cumbersome. Any thoughts, any ideas? Anyone want to jump in? So listen, when you fill out the survey and say there isn't enough, people chiming in, all right, I open the floor. Anybody?
Hey, Rob, it's Maureen.
Hey, Maureen, how are you? Welcome.
Thank you. I'm sorry, but I'm baseball capping it today, so you get in the picture instead. I haven't seen a real shift. I don't know if I can figure out, to be honest with you, why some companies in my book go for it and some don't. Don't know if it's historical experiences that maybe HR had or an owner had, but I haven't seen a real shift. I still find that, and again, everybody's heard this, I deal with a lot of virgin groups. We try to get them onto LTD first.
Yep.
And, STD for the larger ones has been a bit of an evolution, but I haven't had too many coming to me about problems with EI, but I suspect that's because most of my clients don't have much STD and probably have very little firsthand experience with EI.
Yeah. And they often don't hear about the problems that their employees are having.
Right.
You see, because they've just delegated it to EI and our short-term disability program is EI, have a good day, right? And they don't hear about the problems, but what I'm saying is where I'm seeing the shift is not that all of a sudden, we've got 1,000 clients and there are 1,000 people starting short-term disability programs. What I'm saying is the shift is people are starting to have different conversations about it, right? We've certainly got a number of programs that we administer on behalf of our clients, whether they be as needed or an ongoing basis, an ongoing plan. But we're just starting to see the shift in the conversations about and around short-term disability. Again, it's not so much short-term disability as it is what their corporate philosophy is and their corporate program is. We're certainly seeing more conversations about William. Thank you, Maureen.
Just like obviously Benefits Trust offers an STD program. What is an employer looking at cost-wise compared to EI?
It depends on claims, right? It really depends on just claims. So for example, I was talking to a client about it that we've had for a number of years, and they've got a short-term disability program, and they had their first claim ever. And it was a mental health issue, right? A mental health claim. Somebody had to go take a couple months off, and they took a couple months off, and the claim was the claim, and the cost was the cost. Right. So it was done on done on an ASO basis, and they were fine with it. They were absolutely fine with it.
Okay.
Yep. John, thanks for your question, William.
Almost all my groups have a supplemental EI top up.
Yep.
And have had for 20, 30 years. And it's fairly effective, and the HR people end up learning a little bit about EI and can guide the employee through that process. But it's like when I started in the business, weekly indemnity was huge. But over the years, it's gone to I have union groups with it, and that's about it.
Yep, absolutely. Yeah, but anyways, good comment. Thank you very much, John. Yeah. STD plans, short-term disability plans with early intervention. I've talked a bit about early intervention. Chris, I'll come right to you in a second. I talked about early intervention, and it's amazing. Early intervention is critical because what it does is it not only tells the employee that we're looking out, but we're telling all the other employees that you're looking at. But it can substantially reduce the time of claims. If you get somebody, on track quickly, it can reduce unnecessary long-term disability claims in a lot of situations. There's a lot of doctors and nurse practitioners that are available through agencies. I've got 2 agencies listed here, Organizational Solutions, Inc. and Disability Management Canada, both professional organizations, but a lot of employers will look at these groups to assist them with their short-term disability programs or their management of their programs. It works really well, especially with enhanced benefits, but communication is critical. Real quick note, and then Chris, I'm going to come to you, but I did a presentation in Seattle, Washington a number of years ago, and Microsoft, the head of Microsoft's HR was there, and they were talking about long and short-term disability. And this is, again, in Seattle, it's a little bit different, but they had, if somebody was off sick for more than 3 days, they had a doctor that would do a house call in Seattle to that patient, to that employee, because they wanted to make sure that they were getting better. So it was amazing. They had a doctor on staff that would do house calls. Amazing. Chris?
I think one thing to remind everyone is to remind your clients about applying for the EI premium reduction program.
Yeah.
Because I've taken over groups where they actually had short-term disability in place and they had not gone through the process, very tedious process of applying for the EI premium reduction. No sense paying, for double the coverage. So make sure, just a piece of advice, everyone, to let your clients know about that.
Checklist idea. Put it on the checklist, because that's a great way to start conversations as well. Group critical illness. Thank you. Thank you for everybody's input.
Robert?
Yes.
Robert, Mike just chatted that you guys in-house adjudicate WI claims, STD claims.
Yes, we do.
Do you have doctors on staff?
We have a doctor available to us if it gets complicated, but we do not say that we are doctors. We just make sure that they are under care. And if an employer decides that they want us to get a doctor, we have a doctor available that we can, for a fee, send an employee to.
Thank you.
Group critical illness. We've got 42 minutes, or we're 10:42, so we got a little bit of time here. Group critical illness pays a lump sum of money tax-free to an employee if after a critical diagnosis. And the best part about this is they can use the employee can use, and their family can use this money at their discretion. They can use it to pay for parking at hospitals if they've got to go to hospital and medical visits. They can use this money to go to Walt Disney World. They can do whatever it is that they want to do. Waiting period or survival period after the diagnosis is normally 30 days. And there are really, I know every contract is different, but there are really 2 types of policies. Group policies. There's one that's a very basic group policy. It covers sort of 3 or 4 diseases, things like a cancer, stroke, heart attack. And then there's enhanced coverages, which is the only thing that we would sell, quite frankly, that covers in some policies as few as 20 and other policies with more than 30 plus different diagnoses. As well as that, a number of policies have second event coverage. So you can have a heart attack and come back to work, and then 3 years later, God forbid, you get, have a stroke or have a cancer or something, and you get it paid out again. So these critical illness is relatively new in the Canadian marketplace. When I say relatively new, it's probably 15, 20 years old, but it is something that a lot of companies don't have yet. It's amazing. They haven't added it. But this is a story with a real happy ending. We were the first people to ever sell, and I can't remember, it was AI or Industrial Alliance or National Life. It was right around when they were changing their colors, so to speak. But we sold the first ever group CI policy for Industrial Alliance. It was a $25,000 flat benefit, and we sold it to a auto body repair shop. October 30th, an employee wasn't feeling well. He was golfing that day because it was a really nice day. And he wanted to get one more round of golf in. And he came home and he said, "I'm not feeling well," to his wife. And his wife said, "You drank too many beers and you had too many chicken wings. Sleep it off." November 31st, October 31st, he walks into the ER because he still isn't feeling well. He's feeling worse. That was a Saturday on October 31st. He walks into the ER. On November 1st, Sunday, he's in St. Mike's Hospital. He went from Lindsay or Peterborough, wherever he was, to St. Mike's Hospital via ambulance, and he had a quadruple bypass surgery. This is on Sunday. On November 1st, he didn't come to work. That's when everybody learned about it, on November 1st. Or on November 2nd, pardon me. On November 2nd, he didn't come to work, which was the Monday. And everybody was chatting. Everybody's going, oh my God, did you hear about Bob? Did you hear about Bob? Did you hear about Bob? On December 1st, on November 2nd as well, when they heard about it, the business owner called us and said, how do we claim on this stuff? And we said, we don't have any idea, but let's figure it out. And we filed the claim, and the claim check was delivered by the employer on December the 1st. Right, or December the 2nd or December the 3rd. But the interesting thing is on January 15th, the employee was back at work doing light duties. He would never have qualified for long-term disability. That particular story is important because what was really interesting is they had about 15 or 20 employees in this particular body shop or auto repair shop. And they were worried about this guy. They were truly worried about him. This was in a smaller town in Ontario. They were worried about him. And they were worried about the timing of it because they go, holy smokes, this guy's got some kids, right? Christmas is coming up. We're going to have to pass the hat. And all of a sudden, on December 1st, he got a $25,000 check. He was concerned about his care. He wasn't concerned about money. The other employees knew that he had this money coming in, and they were excited about it. And the best part about it was the owner of the company delivered the check personally. Very powerful. The message got through to everybody, right? So I think critical illness is a terrific benefit, especially for smaller employers. There's a lot of water cooler chit chat that goes on. Still to this day, even if people are working remotely, there's a water cooler chit chat. And you know what? I have a story that it still haunts me to this day. We sold that policy. We saw it being paid out. We were recommending this to many of our clients. You know who didn't buy it? Me, the benefits trust. Still haunts me to this day. I said, I'll get around to buying it when we review our benefit plan. Well, guess what? The cobbler's children have holes in their shoes, right? Or however the story goes. I didn't implement it. I forgot about it. I was busy, whatever it is. We didn't do it. Guess what? Knock on my door. Rob, I've got cancer. 6 months after this guy was diagnosed with cancer, we kept him working as long as he could. We gave him anything that he could need to work. And then we got a note from his wife that he had passed. It still haunts me to this day. I would have loved to have been able to deliver a $25,000 check to him to help him out. Right? It was critical illness for small employers is a terrific benefit. Creative plan designs, really interesting. I had a guy come to us and says, can you write a standalone CI case for a 50 life group? And I said, absolutely. Right? Absolutely, we can. So it was interesting. In this particular case, the guy wanted $10,000 for all of the employees and the executives. I think there was 3 executives. They got $150,000, and it was sold in one meeting sale because one of the executives, the decision maker, was not insurable. He was not insurable. He really wanted to get a personal critical illness policy, and he couldn't get it because he wasn't insurable. So all of a sudden, you know, the advisor was listening to this story about how this guy was not insurable, and he says, "Hey, if I could get you $150,000 of critical illness insurance without any evidence of insurability, would you be interested?" He goes, "Absolutely," because that's a no-brainer. So he proposed this idea, sold them on the idea that the other 49 employees or 46 employees would, you know, take away the executives. They could have this $10,000 of benefit because it's a good water cooler chit chat. And in addition to that, the other executives are going to be covered for that $150,000. It was sold. We did this 1 year on a standalone basis. And the other advisor never asked any questions about it, never even talked about it, didn't know they had it. And after a year, they got the rest of the case. So it's a great prospecting question, right? Have you ever been declined for insurance? Fantastic. Personal insurance. I could show you a way that we could do this. We're going to leverage your your 49 other employees to get what you need, right? And you should have that anyway. It was a great conversation, right? Another creative plan design idea is CI, you know, a standard CI plan. Great. You just put in, you know, 2 or 3 or 4. What are the groups within your group? These are great questions. What are the groups within your group? Great. For the executive group, we're going to throw in 100,000. For a management group, we're going to throw in 50,000. And for your employees, we're going to throw in 25,000. Then, you know what, if that's not enough, we're also going to do a voluntary guaranteed issue CI program up to $100,000 with a $50,000 NEM. So the executive, in this case, if they wanted to buy an additional 50,000 without any evidence of insurability, they could, right? The employees could buy an extra 50,000 if they wanted to. The advisor met with all the employees because what his philosophy was is the employees, if they don't want to purchase this additional benefit, they need to sign a waiver to protect the employer that says that this was offered to them. So the advisor met with all of the employees and he forged, a profitable relationship because he sold other people other products as well as the CI, because he just asked a couple of great questions and got them intrigued, right? And got them intrigued. So, you know, it's not just about selling group insurance. It's about you know, dealing with your employers, dealing with your clients in creative ways and asking great questions. Right. So, you know, the question, would you be interested in $100,000 if you don't have to show $100,000 of CI if you don't have to show any evidence of insurability? Hey, I'd be interested. Absolutely. You know, or the other way, you know, would you like to deliver a $25,000 tax-free paycheck or check to some, you know, key employee if they get really sick? Right? Do you want to deliver a check that doesn't come out of your bank account? That's tax-free. Do you want to deliver that to that sick employee? Absolutely. You know, these are great questions to ask to start conversations, right? But it's an amazing, you know, an amazing benefit. And it's fantastic, again, for uninsurable decision makers. It's great for all groups at all income levels. I can't think of one situation where group CI doesn't work. Group CI doesn't make sense especially because we're dealing with smaller employers. It's a powerful message around the water cooler. My wife worked at the Royal Bank, you know, 60,000 people or 80,000 people that work at the Royal Bank. She worked in a branch in Vaughan, and the branch was big, so she only worked with a small number of people. A small number of people might have had that water cooler chat, but not the entire Royal Bank. When you work in a small company, everybody knows everybody's business. When the boss is delivering a $25 or $50 or $100,000 tax-free check, it's a powerful water cooler message without a doubt. So trends and developments, as we're running out of time here, folks, and it's been a lot of fun, but trends and news and developments. Well, you got to remember the pre-X clause. And if you run into a prospect that's got an old CI policy, right, I'm willing to bet the CI policy has changed because they used to have a 12-12 pre-existing condition clause. Now, a lot of the new policies are going to a 6-6 pre-existing condition clause, right? So if you find a case with an old contract, it's time to change it. As well as that second event payouts are happening. It used to be once you claimed on CI, adios amigos, right? Now you can still remain an employee, still remain still have the benefits. So you can have second event payouts. Make sure the policies that you are suggesting have those types of things, because if not, you're going to be caught flat-footed. As well as that, a lot of policies, they're now waiving the 30-day survival period. Now, if you're diagnosed with a cancer, if you're diagnosed with you have a heart attack, whatever the situation is, right? You're diagnosed with a stroke, you can apply right away. You can apply right away. You don't have to wait that 30-day survival period. So they're making it easier and making it better, the insurance companies, in my opinion. I'm not sure if this is at a competition or they're realizing that there's the 6-6 is good enough and the waiting period is not relevant. But remember, advise your clients and employees to submit a claim as soon as possible. As soon as possible, right? And you're not, I'm not sure if it's a covered condition. Don't care. Submit the claim. Have the insurance company say no. Have the insurance company say no, because there's so many different things out there that are covered that a lot of people don't know about. But have your advise your clients and your employees and their employees to submit claims as soon as possible. Remind your clients of this at the time of renewal or an annual meeting you have with them. Ask to do a lunch and learn. This is a great, powerful chit chat water cooler moment. And you start off with, does anybody here know anybody that's had cancer? 90% of the room is going to put up their hand. Does anybody know anybody that's had a heart attack or a stroke? The rest of them are going to put up their hand. This is what this is there to protect you from. We're going to deliver a check, a meaningful check, a material check, $10,000, $25,000, $50,000, depending on what the benefit is. We're going to deliver a meaningful check. It's a great touch point, client touch point idea, and it's a great way to check in. It's a great way to check in with your clients, right? It's a quick conversation, right? But you can do it. It's a great way to check in with your clients. We had a client that they had lower wage earners. They had a lot of complaints about the long-term disability program. They didn't want to have the long-term disability program. It was a it was a taxable benefit, tax-free. Sorry, it was a tax-free benefit because the employees were having to pay it. They didn't want to have it anymore. There was a little bit of mutiny on the bounty, but the client decided to do a short-term disability and a CI integration. Again, CI does not replace long-term disability by any stretch of the imagination. It's a different benefit, but they were fine with it. And what they did is they set up a 26-week short-term disability program with a $25,000 CI program. They said, great, you are diagnosed with something. We're going to pay you for 26 weeks, formal early intervention. We're going to do all these wonderful things. If you can't come to work because you're sick or you're disabled, you're going to be paid for 26 weeks. And then, but if you're really sick and you've been diagnosed with something, we're going to pay you for 26 weeks, but we're also going to deliver a $25,000 check. Again, it's fantastic in this case for lower wage earners. The employees loved it, and they didn't want or couldn't afford the formal long-term disability program. Again, I got to stress, don't scream at me later. It doesn't replace, it's just a different benefit. So in summary, we've only got a few moments left, but we're going to stick around afterwards. But in summary, EI benefits, know them, table stakes, know the stuff. Remember two things. If you remember these two things, it's 55%, $668. You know, you're well on your way. Application is relatively easy, but it certainly is cumbersome. It takes a month 80% of the time, so 20% of the time it takes more than a month. So still living paycheck to paycheck, it becomes difficult and questionable. Short-term disability, you know, it depends on what the client wants. Ask great questions. It doesn't need to be a short-term disability plan per se, but it can be a policy. It can be outsourced, or bits and pieces of it certainly can be outsourced. So you got to ask those great questions. It's not just for unions anymore. It's not just for unions anymore at all. Ask your group clients about critical illness water because of the water cooler value that it adds. And the key thing is ask your client before somebody else does. Ask your client before someone else does. These are great ways to check in with your client throughout the year. You don't have to wait for the renewal. You know, it's just calling someone up. Hey, Chris, because you're at the top of the, you know, hey, Chris, I'm wondering if we have 10 minutes that we can have a chat next week. Is Thursday at 10 good, or should I call you Friday morning at 9? Right? I just need a 10-minute chat. I want to check in with you on a couple of things. Right? Hey, have you ever been denied for insurance? Because we got a great solution for you. Right? Upcoming Zoomcast, folks. We're going to do this a couple more times, but on June 18th, 20th, and 26th, we're going to do administration services versus traditional insured group benefit solutions. We're going to talk about what the difference are and what the differences are, pardon me, and how to look at groups maybe a little bit differently. And that's going to be a fun session, as hopefully we're going to give you a tool for that group in that session as well that you can use to determine what if it makes sense and when it makes sense. So any questions, ideas? I'm going to stop sharing. Again, we're going to be finishing up formally right now. Stop share. There we go. We're going to be finishing up formally right now. So on behalf of all of us at the Benefits Trust, we want to thank you. We're going to be sticking around for a few minutes to carry on the conversation. But we want to thank you. You're going to get a CE credit for participating today. You're going to get a survey to tell us how we did. We're going to sign you up for our Trusted Advisor newsletter, 131 months in a row. These have been going out. We're open for business. The door's wide open. We've got some 2023 inventory on the shelves we want to get rid of. So, we got to get rid of some of this stuff. So please reach out to us if we're doing business. Thank you. If we're not doing business, we'd love to do business with you. And we look forward to seeing you soon. So again, we're going to stick around, but we can stop recording, Rob, so we can take things on.